Welcome to the Inspire to Invest podcast, where we're sharing stories from real estate investors and how investing has changed their lives. This episode of the Inspire to Invest podcast has been brought to you by HoneyTree REIT and PropertyCast.io. Hi, everybody. Welcome to Inspire to Invest. I have Marcin Drozdz here with me from M1 Real Capital. He's the managing partner where him and his team focus on acquiring value-add multifamily properties, specifically in the southeast location of the United States. And over the past 18 years, he's established himself as the go-to in the world of capital raising and deal structuring. He has sourced well over 9 figures, so just a little bit of chump change, to acquire over 1,600 units across the US and fund several businesses. And when he's not on the lookout for new opportunities, he's teaching up-and-coming real estate investors how to raise capital, scale their real estate business, and also launch their funds. So with that being said, thank you so much for joining us today. How are you?
Doing well. Good to be here.
Good to be here as well. So I'm excited that we're finally having the chance to talk. And even though we talked about in your bio that you focus on the US, you're from Toronto, is that right?
I'm a Canadian, yeah.
Yeah. So we'll dive into how you decided to shift south of the border, but maybe you can give us a little bit of background in terms of how you got started and what life looked like before real estate.
Sure. Yeah. So like so many people, 20 plus years ago, I read Rich Dad Poor Dad. I'm like, I can do that. The book makes it sound pretty easy, right?
Yeah.
So, me and a buddy of mine, we went out, we bought our first rental property and, very quickly learned about negative cash flow. Apparently my real estate agent didn't have everything figured out as I thought he did way back when,
the 1% rule.
Yeah. It wasn't even the 0.5% rule. And I was really talented to screw that up 20 years ago, right? So so we bought the house. What started as a rental turned into a flip. We did quite well on it. The real estate bug obviously bit me pretty hard. And then somewhere along the line, while I was in school, I made the decision to transition out of. Initially, I was thinking of becoming a lawyer or something along those lines, and I had way too much fun with real estate and business and entrepreneurship and all that stuff. So started buying properties, got recruited by a private equity firm. And as luck would have it, they were focused on large multifamily. So that was kind of the transition.
So then how did that work in terms of you acquiring your own portfolio? So you're working with this private equity firm. Obviously, you're learning, the landscape and stuff like that. But what did your first deal look like? And then how did you continue to grow and scale from that point? And how long did that really take in essence?
Well, yeah. So, I mean, there were lots of little deals, I guess, tongue in cheek, because no deal is a little deal, especially when you're starting out. But lots of individual properties early on. Even when I worked at the PE firm, we were buying smaller properties on my own and doing stuff. And it was kind of like moonlighting, doing my own thing while trying to learn the big thing. And but I think the first big transaction or big deal I did was when I left the PE firm. I set up a fund. We did an 8-figure equity raise, and we were buying medical plazas in Arizona. So this was back in 2011, 2012, 2010, 2011, somewhere around then. It was 2011, 2012, somewhere around the bottom. If you remember back then, our dollar was par, which was fantastic.
Do you remember?
We were going down to the US and we were looking like rock stars, and people weren't really spending money in the US. So it was like the Canadians were basically running a few markets, like in Florida and parts of Arizona. And so we were one of those groups who went down. We were buying medical plazas and we did a fair bit of that. And
what attracted you to that? Like that specific market and also that asset class?
Well, for me, I've always made decisions based on people, not things. So for me, I had a really good operating partner at the time that was patient enough with me. Because again, I'm approaching my 40s now. I was in my mid 20s then. So, I had somebody who's very bought into me and what I could do post working in the PE space. And we worked together. He was more the operating guy. I was more the capital guy, the deal structuring guy, because that's what I understood. And he had a very compelling investment thesis that I bought into. Also, I was familiar with Arizona because the multifamily stuff we did was down there. So it was a people-driven decision more so than the opportunity. But the opportunity made sense too, obviously.
So what would you say, as you were learning and growing, what would you say is the biggest challenge or obstacle that you faced early on?
not knowing what you don't know. Alex Ramosi calls it ignorance debt. And I've heard that said a few other times. So in other words, your ignorance debt is the difference between what you want to make and what you do make.
Yeah.
That per year amount is your ignorance debt. So for me at the time, I was like, wow, wouldn't it be great if we raised, I don't know, 10 or $20 million or whatever it
Yeah.
was. Well, up until that point, I had done it for other people. So my gap between what I knew how to do and where I was at was so big. So that first fund, I mean, I spun my wheels. Oh man, I'm talking to lawyers 3 times over. I'm making
Yeah.
notes. I'm trying to draw like I'm just trying to figure out which way is up. When you play a new sport the first time and you're like, wait, so we all go that, okay, now we go that way. And then
Yeah.
now we go, so you're just trying to pick up the rules of the game, right?
Yeah.
So not knowing what I didn't know early on was probably the most expensive learning curve for me.
So what would you have done differently looking back at that journey?
I would have probably, well, not probably, I should have probably asked for help earlier in the process rather
Yeah.
than just typical, hard-headed Eastern European man, I'll figure it out, right? And it's
Yeah.
just plowing through
Let's do
crap
it the
because
hard way.
I did plow through stuff, but what took me 2 years probably could have taken me 6 months or 3 months with
Yeah.
mentorship, with guidance, with a little bit more of a receptive attitude. And that would have, I'm not saying anything concrete, but that was as real as it would have been for me. That would have saved me a lot of heartache.
Yeah, no, I think that makes perfect sense. Now, when you look at those lessons, like, is there anything that you would pass along to someone that's, they're starting out now and they're trying to figure these things out? Like you say mentorship, but like more specifically and organically, like how can they get the answers to these questions that they may not even realize exist?
So I'll give you the answer, Serena, in the context of something we have in common, which is little kids, right? So my daughter comes up to me and she asks me, well, she's in her why phase now, right? So she goes, she asks me a question. I'll say, well, because of this. And she'll say, why? And then
Yeah.
I'll answer the question. Then she'll ask me why. And after 3 or 4 explanations, I'm getting into like deep rooted, like meaningful conversations to keep explaining away my assumptions of why we can or can't do whatever we're doing.
Yeah.
So the best thing for new people, whether it's capital raising or deal structuring, is literally ask the question why several times over. So case
Yeah.
in point, somebody will say something to you like, you can't do this. And oh, that's probably the best example in capital raising. I had so many people tell me, well, you can't do it this way.
Yeah.
And initially it was like, okay, I can do it. So I'm immediately thinking of a different way. But what I should have done is said, okay, well, why? Well, because the rules are set up for this.
Yeah.
Okay, which rules and why? And just digging into some of the assumptions that people
Yeah.
have, because a lot of times we take whatever our lawyers and accountants say as gospel, and fair enough, you should. They're there to protect you, but there's nothing wrong with questioning their thought process, because a lot of times the answer isn't the reality of the situation. It's just the reality they've created for themselves and their clients based on how
Yeah.
they do business. So, and there's nothing wrong with that. I mean, a lawyer and accountant, their job is to, maximize their earnings based on their hours. And if they don't have to spend another 20 hours learning something new, then they're not going to do it.
Yeah.
But, really digging into the assumptions of why things are done the way they are is the opportunity that, even today, as we continue to innovate, that's really the opportunity for being able to do it.
Yeah. Now, you obviously talked about starting in Arizona. I know just from, keeping tabs on you and stuff like that, that you shifted over to Texas. Can you talk a
Mhm.
little bit about why that market's so attractive to you and, how it kind of caught your attention initially?
Sure. Yeah. So I look at what I do more of a first principles basis. So it's not so much that Arizona is the best place or Florida is the best place or Texas is the best place. Is there's a different strategy for a different season in the investing cycle. So for
Yeah.
example, I really love Florida. I'm bullish on Florida, but I'm a lot more cautiously optimistic on Florida today than I am on other markets.
Hmm.
So and for example, we bought a couple hundred units in Tennessee. I was trying to buy stuff in Florida, and we're bullish on Texas, but But the reason why I got to where I got to is because I'm typically looking for a few things. So number one, I'm looking for a market where you have a fairly large MSA. You have enough people living there. In the US, you like to have 1 million+ people living in a market. That's usually very helpful. It
Yeah.
improves lending. It improves a lot of things. I look for net migration. So are people coming or going? That's usually the
Yeah.
first indicator. So whatever market I look for. So for example, I have people that are like, hey, I like, fill in the blank Midwestern town or Midwestern state.
Yeah.
And I go, okay. They're like, well, what do you think? I'm like, well, I wouldn't invest there. They're like, why
Yeah.
not? They're like, well, it's so cheap. I'm like, that's great. But there's no one moving into this town or this municipality or whatever it
Yeah.
is. So
And they
yeah,
keep
it's
building.
cheap.
Yeah.
Yeah, it's cheap, but
Yeah.
who's going to live there? You need people.
Yeah.
So net migration is the first one. The second one for me is industry.
Hmm.
So I look generally for very strong blue collar type industries, the kind that, you can't have a bunch of engineers just close up their laptop and go away and, that's it.
Yeah.
Because those jobs pay well, but they're not really rooted in any given market.
Yeah.
Look at what happened in California with everybody bugging off to Austin, and now from Austin to, like it's because they have a laptop. They close the laptop, they take their Wi-Fi and their
Yeah. It's not like they're
Starbucks
stuck in a
membership.
factory.
Yeah,
Yeah.
they set up at a Starbucks in another city and they're good to go, right? So that's great that 100,000 or $200,000 employee is there while they're there, but they're not rooted there. So
Yeah.
I really like blue collar jobs that are rooted in industrial, heavy capex, big financial investments where you're not going to pick up. So for example, I'd invested in Tennessee by the FedEx airport. Well,
Hmm.
FedEx is a multi-billion-dollar conglomerate. They're not going to move their airport somewhere
Yeah.
else.
Yeah.
So all those jobs by the airport are not going anywhere. Those were my customers at the time.
It's now a stupid
Uh,
question, but I'm sure people are wondering it. What resources are you using to compile all of this information? Like, is there a specific website where you go to, or your team's just out there scouring stuff, or ChatGPT?
yeah,
Like, what's the golden
yeah.
ticket to that stuff?
Well, I mean, once you're on in the business long enough, eventually you have some pretty good background data on the different parts of the US, and you start to understand things like infrastructure and where the buses are manufactured or where
Yeah.
planes are going and come. So there's that background knowledge because that stuff
Hmm.
really doesn't change much. But in terms of websites, I mean, look, one of the major reasons I love the US is because there's so much more data online. Like with Canada, trying to find stuff is like pulling teeth, right?
Yeah.
So the US, there's dozens of websites. Also, getting on broker lists with people that are selling large multifamily or commercial or whatever you're doing, they
Yeah.
typically will spoon feed you data on why to invest in a certain market. And if they don't do that, you can literally then go to every city, every state has their economic development bureau. They have something that's meant to promote, the city of Houston, the state of Texas, whatever it is. So,
Yeah.
and they'll curate that data for you.
Okay. Yeah. I just figure we want to make sure it's clear for people that have never done this before, but it's intriguing to them and something that they want to do just to help them
Yeah.
understand that path. Now, in terms of your successes, what would you say you're most proud of when you look back at the last 20 years?
I think the thing I'm most proud of is probably the thing people wouldn't really think about until you're 20 plus years into the business. And that's been my ability to just stay resilient and consistent and, never have because look, you're going to have ups and downs. You're going to have situations where deals don't work, partnerships fall apart. You feel
Hmm.
like you've been betrayed. You feel like you've been screwed. People talk behind your back. They talk in front of your face. And I think what I'm most proud of is just the consistency to be able to not just weather the storms, but become a better version of myself every time something happens. Because I think about the things that I deal with today, and I think 15-year-old, 25-year-old me would probably crawl under a rock.
Yeah. Yeah.
And so because people are mean, people say things online, things happen, business deals don't work out,
Yeah.
things cost money 10 times more than you expect. You have disagreements, you have legal matters, but you become a better version of yourself through that. So I'd say first and foremost, that's probably what I'm most proud of.
Yeah, no, that's great. I mean, it's kind of like the quote they talk about each new level is going to require that different version of yourself, right? So we'll talk a
Yeah.
little bit more about that when we come back. We're just going to take a really quick break for a word from our sponsors. I value transparency, integrity, and trust. If you choose to work with me, you can be assured that business will be conducted honestly and openly. Time is of the essence in this industry, so you can expect nothing short of quick, clear communication from me. I'll keep you informed every step of the way so you feel comfortable throughout this entire process. Our homes are where we eat, sleep, relax, and play. My clients' best interests are at the heart of everything I do. And with this said, my service to you doesn't end when the transaction does. As your realtor, I'll not only help you buy and sell your property, I'll also educate and support you along the way. I want to help you fulfill your goal of home ownership and become your trusted real estate resource for life. I can't wait to share my passion for real estate with you. More importantly, find you the perfect house to turn into your home. Looking to buy, sell, or invest in Durham Region or Toronto? Let's chat. Is the real estate investment you're considering a gold mine or a landmine? Introducing PropertyCast.io, the black magic of real estate investment analysis. Use PropertyCast.io to analyze and underwrite real estate investment opportunities, unlock the potential of a property, and share professional reports. Jordan McGregor is a commercial realtor and founder of PropertyCast.io. He identified the need to simplify and streamline how properties are underwritten to help investors make better decisions and sound investments. PropertyCast.io is a best-in-class purpose-built tool for real estate investment analysis. To find out more, go to PropertyCast.io, and to sign up, click the link in the show notes. Inspired to Invest is proud to support the Beyond Success program. In today's complex world, it's absolutely crucial for our youth to learn how to take charge of their financial future. We believe that every young person deserves access to accurate, practical financial information. Designed to bridge the gap, the Beyond Success program leverages a comprehensive educational bootcamp to equip young minds with essential financial literacy skills. At Beyond Success, it's not just about teaching financial literacy, it's also about fostering a foundation for a prosperous and empowered future. Join us. Together we can build a brighter financial future for the next generations. Join us. Together we can build a brighter financial future for the next generations. Hi, everybody. Welcome back to Inspired to Invest. I have Marcin Drozdz with me today. He is the founder and partner of M1 Real Capital, and we're talking about his journey as a capital raiser and getting to 1,600 units across the United States. So before the break, we were talking about some of the resources that you look into to explore demographics and things like that to ensure that you've got a sound investment. One of the things I'm really curious about, and I always love to ask people, is what would you say is the craziest thing that's ever happened to you as a real estate investor?
Well, I don't know if this is the craziest, but I think it'll qualify and it'll be relatable for a lot of people. Is in my early years when I left the PE firm, we were still buying small multifamily little deals in Canada. I was in Winnipeg at the time, actually, way back when. And I remember I had 1 month where I was supposed to close on 3 properties, and I had one investor for all 3 deals. And the guy calls me it was maybe 2 weeks before we were supposed to close.
Yeah.
And he tells me he's not going to write the check for all 3 of the deals.
Well, at least you had a couple weeks notice.
Well, I mean, was it whether it was 7 days or 12, I don't remember, but it was really tight.
Mm-hmm.
And the closing date was supposed to be on Halloween, December, I think it was October 31st, right? How fitting, right? So that's not even the crazy part. The crazy part is my lawyer's office was in my building, and it was down the hall from mine, and he was my closing lawyer.
Yeah.
So he'd done lots of transactions with me, so it never even occurred to him that I didn't have the equity. He walked over once, and he's like, "Hey, just so you know, we have this closing. You got to come by and give me instructions." I said, "Sure, no problem." And then I don't have the cash yet, but I'm legally obligated to close. You know how it is, right? So what ends up happening is I reach out to some people that I just recently met, and I literally get on the phone. I'm like, "Hey, just so you know, like, full disclosure, here's what happened. Here's the deals. What do you think?" "Well, let's talk about it." One of these guys came by the office, and we're meeting, and we're talking about it. And as we're meeting, there's like 6 days left before closing or whatever. It's even less days now, right? Yeah. And we're meeting in my office, and because my lawyer was down the hall, as I'm meeting with this other individual, all I hear in the reception area is, "Where is Marcin? Where is he?" And my receptionist at the time, she goes, "Well, Mr. So-and-so, he's just me." "I don't care." And he's this older, he's retired now by now, but he's just like this no nonsense lawyer. That's why I loved him. Walks in, looks at me, looks at the desk, throws down a box full of keys with all the keys for all the units, right?
Oh dear.
And he goes, I have all the keys. You know what I don't have? I'm like, hello, Mr. So-and-so. He goes, doesn't even break a sweat. He goes, you know what I don't have? I go, what's that? He goes, instructions. Where are my instructions? As in, where am I getting, the equity, right? And it's not a cup of coffee either, right? So I look at him and go, I know, I'll be right over. I'll talk to you about it in a few minutes. So he walks out. You got to remember the investor's sitting over in front of me. I'm sitting here. You just literally saw these theatrics, right?
Yeah.
And because I was so candid with the investor, I told him exactly what was going on. It's not like I was trying to whatever. I just here's what's going on.
Yeah.
The lawyer walks out. I look at the investor. I look at the keys. I look at him. I'm like, so what do you think? And he just starts laughing.
Wow.
So he said yes, and it was a great deal, but just the time, right? And he says yes. So I literally followed him to the bank
Oh my gosh. Wow. Yeah, no pressure, right?
after the meeting. I literally followed him, stood beside him in line. I'm like, okay, so
Wow. Yeah, that's definitely crazy. What would you say, like, is probably your biggest closing technique? Like, I know a lot of the times, people want to do business with people, and it's a lot about like how you present a deal, not what the deal is. Like, are there any top line tips that you would kind of pass along that you find that just over and over again always seem to work out well for you?
I think the best thing to keep in mind when you're looking, obviously raise money legally, make sure you have the right paperwork and all this with your lawyers, but
ACOCS
above
is
and
watching. Yeah.
well, yeah, I mean,
Yeah.
obviously make sure you work with lawyers.
Yeah.
Capital raising is regulated, so make sure you
Hmm.
do it right. But
Yeah.
look, above and beyond everything else, the best framework I think I'll share with you here is it's not so much techniques or tactics, it's maintaining this frame where you're creating an environment where people are wondering how much and when they're going to invest,
Yeah.
not if.
Yeah.
And if you can help people get over the if part so that when they meet with you, it's when and how much, not if,
Yeah.
then you're already miles ahead because everybody in their mind is thinking if they trust you,
Hmm.
if they can trust you,
Yeah, and trust
whether
is
it's with
probably
a,
one of the biggest things right now. Like, I know we were talking beforehand just about
yeah.
how things have changed and how quickly they've changed. Like, what would you say is the best way? You've got your track record now, but early on, like, how do you get someone to trust you when it's your first deal or your second deal or a much bigger deal?
Well, so one of the things we teach and one of the things I encourage everybody to focus on is really getting very clear on your unfair advantage and your personal unfair advantage. We break that up into 6 pillars and there's 6 components to things with you personally that
Yeah.
allow you to position yourself from a position of competence as opposed to somebody who's literally just trying to like scrounge some cash together to do a
Yeah.
deal. So how do you take that frame again, that expert frame? Now, I'm not saying you represent yourself as an expert in something that you're not, but whether you've been a gym teacher for 5 years or you've been a real estate investor for the last 10, you
Yeah.
have some form of credibility from some positioning
Yeah.
and taking that and applying it to what you're doing, plus potentially partners and things like this will give you a lot of credibility to build that trust. Now,
Yeah.
in my experience, people that are writing 6, 7 figure checks, they don't need to be closed. They need to buy in. So in other
Yeah.
words, you want to create a vibe where people are lining up to be part of what you're doing, as opposed to you pushing things onto them.
Yeah. Yeah. No, and making it feel really exclusive, like kind of
Mhm.
creating that FOMO experience. You talked a lot about mentorship and learning and stuff like that. What would you say is some of the best advice that you've been giving? And I know you did talk a little bit about, paying to get that further ahead, but maybe is there something else that you haven't touched on?
Yeah. So 2 things come to mind. One is when things are going really well, you're never as smart as you think, and when things are going to hell in a handbasket, you're never as dumb as you think. So that's probably good to keep in mind, especially
Yeah.
as people go through some tough times.
Hmm.
And the other thing is when if you're talking about raising capital, I'll tell you right now, the most important thing to remember is if you chase money, it will run from you. So What I literally mean by that is if you try to apply the same methodology that maybe you did in sales as a real estate broker or as somebody who sold equipment or sold cars or whatever it is, those methodologies don't work for capital raising. It's the exact inverse of that equation
Interesting.
because capital raising is an attraction business, not a selling business.
Yeah. Yeah, that's really great. That's actually something I haven't really heard quite like that, but I think that's really powerful. In terms of financial freedom, obviously you've been on this journey building this big portfolio. What would you say that means to you? Is it a particular number of doors, cash flow, work-life balance?
So I don't know about you, but this whole work-life balance thing, I think it's a way to sell employees on becoming entrepreneurs. You convince them that this thing exists
Yeah.
when really I think entrepreneurship is more a function of sprinting and resting because there's moments where it's time to sprint and there's times where it's time to rest.
Yeah.
20 years at it, I don't ever think I've said, okay, I'm going to work 37.5 hours a week
Yeah.
because
No, it's never as
some
structured as that.
no. But so I don't really strive for that. At this point in life, I think for me, it's a function of like, I almost look at myself as like a hero in my own story. And ultimately, as my daughter and hopefully future kids grow up, they see that and they're proud of their father. My wife's proud of her husband. My kids are proud of their father. And I never want to do anything that would put me personally from my family's perspective at risk in that regard. So that's my starting point. So, beyond there, I mean, look, whether you have 100 grand in the bank or a million in the bank or 10 million in the bank, there's a point of diminishing returns after a certain point. And for me now, what I really do like is when that spark goes off in people's eyes, whether it's partners or clients or students or whatever it is, and they're able to, because somebody who has nothing and they generate their first million in net worth, that's a big deal. Somebody who already has 10 million net worth and they add another 10 million. I mean, that's exciting, but
Yeah.
what are you going to do with the extra 10 versus that first million that
Yeah.
somebody creates for themselves?
Yeah. Yeah. I mean, when I had my own business, I remember someone said to me, your first million will be your hardest. Right. So I think it's just conquering that achievement, which makes it so exciting, right? When you look back now at everything you have achieved and where you want to go, like how would you say real estate investing has changed your life? And is there a particular goal in terms of like number of students even that you want to empower or teach through your course and your coaching program?
Yeah, so our clients, I guess students, as a good way to refer to them, they've raised about $250 million to do their own deals, to do about
Wow.
$1 billion plus in deals. So that's pretty cool to be able to help people, move the needle. And I'm sure we created a few millionaires or multimillionaires in there. And
Yeah.
maybe created is the wrong word because ultimately they did it, but we helped empower them to have the tools, right?
Yeah.
So that's been a lot of fun. I think I want to get to a point where our clients have raised over $1 billion to do God knows how many billions in deals. That I think
Yeah.
that's going to be a really cool milestone. And then from a personal level, I mean, real estate gives you options. Real estate gives you the ability to say, screw you, here's my 2 weeks. The real estate gives you the ability to just close everything down for a few weeks and I don't know, go travel the world. It gives you
Hmm.
lots of options. But more so for me than just real estate, the real skill that I've developed over 20 years is deal structuring and capital raising. Real estate is my favorite form of artwork, so to speak.
Hmm.
But I've bought operating businesses. I've funded all kinds of different things. I own a publication company. We have a few different things that we own and run
Yeah.
outside of real estate, but real estate for most people that are looking at their first way of creating some stability and, financial security, then real estate is, it's the best place to be.
Yeah, no, absolutely. Now, obviously, the name of this podcast is Inspired to Invest. So I always like to ask my guests if they have a particular quote that really motivates them or gets them going.
I'll share with you what one of my mentors told me when I first started working in the space. He said to me, he goes, I don't care about the return on my investment until you can show me the return of my investment. So in other words, he doesn't care. Don't get too caught up in how much you could make. First, focus on how you get your money back. And then you can compare the risk of getting your money back to the potential return on your money. And then you can actually purely assess whether that risk is worth the return.
Yeah, I think that's really wise advice based on the current climate where people are struggling to see their principals back. And it
Yeah.
wasn't really a question that I had lined up, but to that point, what would you say that investors should be looking at when they are talking to a company about their exit strategies and just when it comes to due diligence so that they are protected?
Yeah. So some of the major issues that I've been seeing in the space over the last, call it 2 years now, was people were using very aggressive assumptions for growth. So they were assuming that the future would be rosier than the past, which is always the wrong premise to use as a starting point. Secondly, most people are married to one exit strategy. So in other words, their only exit strategy is to do X, Y, Z. Like here's the process,
Yeah.
and we're going to make it work no matter what. Okay, I get that. But let's assume one of these things doesn't line up. Where does that leave us?
Yeah.
So having multiple exit strategies is important. And then the third thing is I always look for skin in the game. So for a lot of times that could be as simple as financial, but for some people, maybe they don't have a net worth yet and they can't even put 10 grand into a deal. That's fine. That's not the
Yeah.
be all end all, but they
Mhm.
have to be all in with their sweat equity if they're not putting in any money.
Yeah.
Because I've seen too many times where people will go and raise some money. They have no personal skin in the game or no time invested or really no, nothing tying them to that. And
Yeah.
then what happens is they go off to chase something else that's shiny. And then this thing goes to, the
Yeah.
story.
Yeah, no, I think that's really, really helpful. So thank you for giving us some insights on that. In closing, if anyone does want to reach out or learn more about your coaching program or your opportunities, what is the best way for them to connect with you?
Yeah. Marcin at marcindrozdz.com is my email, or just marcindrozdz.com, the website. And, Serena, what we do with M1 isn't a fit for everyone. It's for people that are already doing something. They just want to scale. So
Yeah.
there's a lot of really good intro programs out there. We're not that. We're for people that are, and the reason why I called it M1 is because literally the first million is the hardest. So for people that are looking to raise, we have 7-figure, 8-figure, some 9-figure guys that are raising capital. That's great.
Yeah.
But it's more for people that have already done some stuff and they're like, hey, I'm hitting a wall. I need to scale. And
Yeah.
that's where we really help.
Yeah, no, that's amazing. So we appreciate all of that. We'll include your information in the show notes below. Of course, thank you for taking time out of your busy schedule to be with us for today. And for anyone that is watching or listening, thank you for tuning in. If you have enjoyed this episode, make sure that you have subscribed below and you're following along at Inspired to Invest podcast on social. And remember, when you invest in yourself, the sky's the limit. Thanks again. Thank you to HoneyTree REIT and PropertyCast.io for bringing you this episode of Inspired to Invest. The views represented on this podcast are for general information only and does not constitute investment or other professional advice or an offering of securities. The host and guests featured on Inspired to Invest make no representations as to the performance of any particular investment. Should you decide to make an investment, you are responsible for conducting your own review and analysis. It is recommended that you obtain independent legal, accounting, and tax advice from licensed professionals.